Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I'm still going through all the companies that I have in this portfolio just one by one. They've all reported earnings recently, so I want to go through the financials and see if I need to hold on to this one or sell it or add to it or whatever the case might be. So I will be doing this inshallah in the next few weeks. We're going through every single majority of the companies that I own in anyway, because after the earnings report is a good time, let the dust settle for a bit and then look at the companies that you own. And that is the disadvantage of owning individual stocks. Of course, if you have ETFs, you don't have to worry about that. Someone else will do it for you. You just pay that expense ratio. But generally, if you do own a single, individual stocks, you'll have to do the research. You'll have to keep up with what is going on. And sometimes you don't need necessarily to look at quarter after quarter, but you might just wait about maybe 6 months or so and then see if the company is still, what you've basically, the thesis basically that is still there. So it's very important that your thesis are still there and you still believe in the business and they're still making a profit. They're still profitable business. They have excellent free cash flow, etc, etc. And so that's really important. So I'm going to go over one of the companies that I have in this portfolio. But before we do that, we're just going to talk about a little bit about the market generally. And some of the things to look for. Today is Tuesday, so tomorrow we have some basically earnings reports coming through. So we just want to mention, I would just want to mention that first, and basically some of the companies that are reporting, because these could be a game changer for basically for the rest of the week. But I don't think it's going to be a game changer for the rest of the year, but it might change quite a bit especially for technology companies. And as you can see, couple of the companies that I'm basically referring to are Nvidia, which is now over 3 trillion company and potentially could move the entire market up or down. Now Nvidia is one of those companies. It's been really volatile stock over the last year and a bit because of AI, and rightly so. To be honest, they are now the leader when it comes to anything to do with AI, and for that reason they do deserve that title. However, we just need to just be mindful of it might last, if they report tomorrow after close and everything is beautiful, I'm sure the rest of the semis will be up to 5%, 10% with it, and Nvidia will probably be up 20-30%. Now the expectation is quite high because a lot of people have bought this stock recently, expecting massive growth, the expectations, especially for the end of the year. Maybe not this quarter, but for the end of the year, people are expecting really high numbers from this company. The next one is CrowdStrike, again another cybersecurity company. It will be interesting to see what the company says about, especially with the with the IT situation that happened recently. The fact that they're getting sued by a few companies. I think one of the companies that are trying to sue them, I think, was Delta Airlines. Was it Boeing as well? I can't remember, but Delta Airlines definitely suing the company. So it'll be interesting to see what they say about that. And then Salesforce, the one I own in this portfolio and the family portfolio as well. And it will be interesting to see as well what they say. I would like to get more information in terms of AI side of things. They do have some, basically products when it comes to AI. They implemented it long time ago. So it will be interesting to see what they say as well moving forward. The stock hasn't done much lately, so it'll be interesting to see if they actually come out and basically mention good things. And another company that's been really down a lot is Lululemon, and it will be very interesting to see what they say, because this company has gone down, I think, over 30-something% over the last year and a bit. So it will be very interesting to see what they say. And Ulta Beauty is another one that's potentially reporting as well, Marvel and a couple of others. So we'll see. Autodesk is another one as well. But for me, the most important one is these three here. So especially Nvidia. CrowdStrike, we'll see what they say about that situation. But yeah, for the one I'm very interested in to see what they say is Nvidia. So yeah, we'll look forward to that one, and we will check out when the time comes. If you're enjoying this type of content, it takes a lot of time and effort to put these videos together, and I want to reach out as much Muslim brothers and sisters out there to help them invest in the stock market and inshallah make money, and inshallah so you are able to retire if that's your goal. If you want to give charity, sadaqah, then that's your goal, inshallah. If you want to help your family, you achieve your goal, whatever your goals are, inshallah, I hope you achieve, and inshallah we can all help each other. Now if you want to join us with the Patreon account, that would be really amazing. It does help the channel massively, because it definitely helps me to, of course, pay all the subscription. We've got a lot of software that we use, subscription of course, and we pay for it, so it definitely helps. So if you want to join us, you can get access to all the buys and sells, the family portfolio, the dividend basically trackers, as well as the Discord, inshallah. Right, now let's now go back and talk about this company, and that company is ASML. Now ASML is Dutch company, and I would, this is one of those companies that completely and utterly monopolize the market. Now there's not that many companies that do these EUVs and DUVs. These machines are very, very expensive. And right now you've got the Intels, you've got you've got the TSMCs and so on. So Nvidia and these companies are designers, so they design the chips that they need. Then TSMC then basically uses these products, okay, to actually make them. And the only company that is actually monopolized this market is this company. So they do have the EUVs, they have the DUVs, and then they have also refurbishment systems, and they also sell older systems to China and other countries as well. And these basically products, it actually cost a lot of money, as you can see here. So 380 million chip machine. Can you imagine that? Per product it costs about, this thing here will cost the TSMC $380 million, which is absolutely ridiculous if you think about it. So yeah, it's probably one of the best. Like I've always said to you guys, this is probably one of the most important companies out there, because without that company we wouldn't have AI, we wouldn't have the technologies that we have, and so on. So it's very, very important. As you can see here, a year to date they are up about 18%, but for the last 6 months they're down about 5%, which is very interesting. So they haven't done anything in the last 6 months, so down about 5%, but a year to date up about 17%. And when it comes to for the 1 year, you can see 35% up since for the 1 year. Now we're going to look at the rest of the financials for this company, and as you can see here, one of the things I've mentioned here is the fact that their machines actually last more than 30 years. So they provide recurring revenue services. So for example, Intel might buy one of those products and they need some sort of maintenance. This is the company that maintains it, and for that reason they actually get money from that, of course. And the switching cost is very, very costly, so nobody in their right mind will actually move away from ASML to any other company, and those companies don't really exist. There are a couple of smaller big companies, but not really a lot. Now they're currently trading closer to $900 right now. EPS about $19 per share, and as you can see, they have a market cap of 360 million. So 60 billion, sorry. They have wide economic mode for very good reasons, like I said in here, and beta is slightly higher than 1. Now current PE is over 46. The forward PE is about 41, and the 5-year average is 44. So based on this, it seems a little bit expensive. And basically, the tech sector is right now about 26. The S&P 500 about 27 PE. Now, price to free cash flow is over 100, which is absolutely crazy. The company pays a dividend of 0.74, which is about $6.60 for every share of this company that you own. Payout ratio right now is about 20%, 27%, and latest increases to basically about 5%. I like the fact that the payout ratio is very low, so that means they can increase that dividend for the next whatever years, and they actually making an effort. Unlike TSMC, they're making an effort by increasing that dividend every single year for the last 14 years. They have a dividend safety of 82%, and they have a free cash flow right now of $3.3 billion of free cash flow, and that free cash flow compound annual growth rate for the last 5 years about 21%. Free cash flow yield right now for the trailing 12 months is only 1%. Free cash flow for the margin is about 11%, which is way higher than what we're normally looking for. In terms of profit margin, we're looking at about 27%, operating margin of 30, almost 1%, and return on invested capital of 53%. Look at the return on equity and return on invested capital of 40%. So the company, the business is doing really well in terms of profitability. Management are doing really good with the capital they have, and the net income grew for the last 5 years about 28% compound annual growth rate, 28%, which is absolutely huge. Now look, check this out, like basically the total return for the last 10 years, you're looking at about 25%. Now revenue compound annual growth rate for the last 5 years, we're looking at about 19%, which is again another huge thing. EPS last 5 years, we're looking also another 33%, and current ratio is above 1, so which is really good. So that means the company has enough current assets to basically pay for any current liabilities that they have. Now growth estimate for the next year, 57% for next year, and then after that growth estimate every single year for per annum, we're looking at about 22%, which is absolutely huge. So this is very high growth business moving forward. We'll see what happens. Of course, that's just estimate, that can easily change. And current price we've already seen $893 per share. According to Morningstar, is actually 990. That's the fair value, and is fairly valued at this point in time. So it's slightly, the fair value is slightly lower than basically where the stock is trading right now, which is very interesting. And Simply Wall Street is also saying it's about 904, so 2% undervalued at this moment. Tip rank is actually saying 1,172. That's about 30% or 31% upside from where we are, and they are saying is a basically strong buy from them. 1,181 from Seeking Alpha, 32%. So these two kind of use more or less the same analyst, but this one is they actually saying is just a buy, whereas this one is a strong buy. Very, very interesting. I didn't actually think it will be fairly valued according to Morningstar, and of course this, and we will look at the basically discounted cash flow model that I used. We'll see basically what the price shows us in terms of that. Now I really like this business when it comes to the business side of it. 99% interest bearing debt, basically 1%, and interest bearing securities 1%. This is one of the reasons I really like this company, and they are buying back their own shares. So the company is very profitable. They're buying back their own shares. They're giving you some dividend. They're growing really, really nicely. And the next basically very profitable, and they are growing very, very fast. And right now it seems basically it is a buy fairly valued kind of situation. Okay, so what I'm going to do now is I'm going to show you the discounted cash flow model that I used, and kind of give you an average of all of this and to see where we are. And as you can see here, we've taken the Morningstar, we've taken some information from Seeking Alpha, we used the simplest Wall Street's valuation, and then we used the multiple valuation model that I've compared with companies like for like, so if basically 4 other companies in the same kind of industries, semiconductors, and the discounted cash flow model basically using their free cash flow from the last few years and discounting back to the current price. And when you look at all of this, you can see current stock is basically $893 per share. That's where they are, and the average intrinsic value based on this is $935 per share. That's a 5% upside from where we are, which is not bad. But then you might want to say, do you know what, this company is potentially risky, of course, and you need your margin of safety, and you might want to add that and say, okay, for that reason I will buy this company if it actually, or stock of this company, if it hits that $841 per share or $842 per share. But right now it seems a little bit overvalued based on that, based on the margin of safety. But if you take the margin of safety out, okay, it's basically right now a buy. Now again, for me, I always do 10%, but you might even want to say, do you know what, I'm comfortable with 15%. So if it hits the current price there, if it goes down to 80, basically an $800 per share, then maybe you might want to basically initiate a new position. Again, this is not financial advice, and I'm not saying go away and buy it, but that's something that you can do, inshallah. Right, final thing I want to do is compare this with the S&P 500 and some of the companies that are in a similar sort of industry. So we've got Applied Material, we've got KLA, we've got Lam Research, and we've got Teradyne as well. So if you look at this, we're looking at 3 years now. But for the last 3 years, basically total return this company is about 10%. 25% for the S&P 500. Applied Material, we're looking at about 47%, and KLA we're looking at basically 144%. Lam Research, we're looking at about 40%, and Teradyne we're looking at about an 11%. And then last 5 years, 334%. The S&P 500 only 96%. So he actually beat the S&P 500. It's very close to Applied Material. KLA is actually done up really well, and these two are very similar. So Lam Research and basically ASML are kind of very similar, and Teradyne is probably the slowest grower when it comes to the last 5 years, and for the last 10 years 940%, 180 for the S&P 500, 881 for Applied Material, KLA over 1,400, Lam Research 1,200 and 680 basically. So these two have done actually better than this company, but Applied Material hasn't done that bad either, so it's very, very close to this company. And that's what I wanted to share with you guys. If you're enjoying this type of content genuinely, but of course, join us at the Patreon account and all of that stuff, but like the video, subscribe to the channel. There's so many of you that watch the videos every single day and have not subscribed. Anyway, what I want to talk about now is I've got 5 shares of this company, £3,364 invested, £834 basically in profit right now, or 33%. And my average for this company, and now some of you like to see this, okay, is $604 per share, or $506 per £500 sorry, just over £500, my average right now. What am I going to do moving forward? I would actually wouldn't mind if it hits about that $800, less than $800 per share. I might start adding a little bit more, because like I said, really like the business model. I can see this holding this company for at least the next 5 to 10 years, and I like the fact that they're growing that dividend. I like the fact that the growth side of the EPS is growing, the free cash flow, everything about this company is basically heading in the right direction. Of course, anything can happen, things can easily change, especially with the semis, because they are very cyclical businesses, and if that changes and it comes down, actually I think I will be buying more, because I can't imagine any other company coming into the market and taking over from ASML anytime soon. So for that reason, I would love to buy more of this company, inshallah. That's what I wanted to share with you guys. I hope you're having a wonderful day, inshallah. And yeah, let me know if you have any questions, and if you own the company, let me know. Let me know what you think about it as well. Have a wonderful day. Assalamu Alaikum.